Welcome everybody to our 25th episode of the Bay Area Housing Market Town Hall. There's so much going on. I want to go over different counties' housing market condition compared to last month. And since we are in November now, we probably want to know about the housing price prediction for next year, the mortgage rate projections, and also we have these news talking about the inflation rate at 6.2%. So how is it going to affect our mortgage rate? And also the biggest news of the month, the Zillow iBuyer flop. What is their fundamental mistakes during this whole iBuyer phenomenon? And also, what are the best value increase, which is the return on investment strategies? So hopefully today you guys will be able to learn something from this webinar. Okay, let's take a look at what's been going on with all these offers. I know it is November. A lot of these are kind of like October, November timeframe. As we talked about last time, the summer did slow down, but as soon as the school started, people came back. I remember last month when we showed a lot of like single digit offers. Now this month you see there are a lot more double-digit offers, number of offers, and it has gone quite a bit over asking price as well. No matter if it's East Bay or South Bay, single family or townhome, but you do see that townhome condos, they are not as popular still. So the single family are still really popular, especially the ones that are in a better school area. They are still going over 18%, 20% over asking price. So there's definitely still a lot of competition out there. So if you are in the market, I know it can get pretty frustrating, but just be patient. Listen to your realtors advising you on the offer situation. Your realtors definitely, when they are making an offer, they need to have a really good communication with the listing agent. And one tip, really important, and I think a lot of buyer's agents don't realize how important this is. As a listing agent, one thing they want to look at is a very well-written offer, meaning your contract should be written correctly, shouldn't have a lot of mistakes, because when you have a lot of mistakes, that means that the listing agent will have to counter you on all the terms. And also they want to know that you have reviewed all the disclosures and also all the inspection reports. It would be very well worth it if everything is signed up front. And I know because every time you make an offer, it's gonna be writing, 5, 6, 7 offers, and you don't want to be signing all these disclosure packages every single time, but be prepared. If you're close to the winning bid, you should have all those signed up front. To have a good relationship with the listing agent can make a big difference. So also the communication is really important. We have buyer's agent just submit the offer without saying anything, without explaining anything, and have a really bad written offer. Even they are maybe the top 3, we would much rather work with another agent who really know what they're doing and negotiate with them instead and see we can get a better price from their buyers. So just make sure that if you are making an offer for your buyers, or if you are working with a realtor, make sure the offers is written correctly and accurately. All right, now what's going on in Santa Clara County? Now in Santa Clara County, we look at the October and September numbers. We have slightly more, pretty much the same, of five units more for this month. And then condo and townhome has a little bit less compared to single family. But then compared to a year ago, we did have a little bit more, and especially for condo and townhomes. And in terms of the median price, it's still going up. And it's still double digit from last year for both single family and also condo and townhome. But then compared to a month ago, it didn't have too big of a difference. But the average days on the market is also pretty consistent as well compared to last month. It's staying at about 2 weeks time for the single family and 3 weeks for the condos. Now, in terms of the price here for Santa Clara County, as we see that this is a chart where we shows the number of sales versus the number of active listings. So if you look at back in 2016 and throughout, most of the times we have more number of active listings, right? But look at what happened. This is, I think, one question that so many people always ask. Why is the price keep going up so much when it's already so expensive? And we kept talking about, is the supply, is the supply. Well, there's two things, supply and also interest rate. So this supply, as you see, number of active versus number of sales, there are a lot more. Whatever comes on the market is pretty much sold. So that's why we noticed that the price have been going up so much. If we just stretch this out, if we compare and see now from 2020 to this month, November 2021, what do you see is that the number of sales went down a little bit, and it looks like it's starting to go back up. So we know that the activity is starting to slow down actually in November, and you can ask a lot of realtors out there, and we definitely see the number of buyers are slowing down. A lot of our buyers are talking about they want to buy next year. So just want to remind you guys is that during the winter time right now, it is a good time to buy because you have less competition. I cannot tell you how many times we remind our clients to look for properties during this time in the winter time, fourth quarter, because there's so many less people competing with you. Now is a really good time during the holidays, as long as you're not traveling. So hopefully you can take advantage of this this holiday season and go out and find the perfect home for you. All right, what about San Mateo County? And if you look at San Mateo County, the single family pricing also have gone up from 1.88 to 1.91 this month compared to last month. And it actually came down slightly. It's 2 days less on the market, and we have less sales, slightly less sales compared to last month. As for the condo and townhomes, the price actually have come down a little bit by 3.24%. Stay on the market pretty much the same, just 1 day difference, and also have almost very similar number of units sold. But then if you look at compared to from I guess September and compared to August, we had much less, like 15% less compared to August. And in terms of Alameda County, the pricing had gone up quite a bit. October, let's go back to summer. You see summertime. Again, I think we talk about this over and over again, is that the misconception about summertime is very hot. You can get really good price, for the seller during the summer, but actually summertime is a slower season of the year, the second slower season after the fourth quarter, November and December. So as you see here, the price gone down a little bit, but then as soon as the school started, the price had gone up again. And in terms of the number of units sold, it was quite a bit, and then it went down a little bit compared to the summertime. But if we look at the cities in the Alameda County, you will see that there are just a handful of some of the cities had gone down in pricing compared to last month. So it's the city of Alameda came down by $15,000, Hayward came down by about $22,000, and San Leandro, San Lorenzo, and Union City also came down slightly as well compared to last month. And as for these other cities, Clayton, Alamo, Danville, Dublin, and Livermore, they also had come down on their median sales price, but all the other ones, pretty much everyone else had gone up in pricing compared to last month still. And especially if you look at Pleasanton, it has gone up almost $200,000 compared to September. All right, so, because we just lift the travel restrictions, we started to see and hear a lot more foreign buyers coming to ask about buying properties again over here. And CNBC also reported that real estate brokers braced for a flood of wealthy buyers from overseas as travel restrictions lift. Just to let you guys know from firsthand experiences that we definitely starting to hear more foreign buyers asking about buying properties here. So with that said, if you want to know about the home pricing forecast, so in 2021, as you see that Fannie Mae, National Association of Realtors, Freddie Mac, Zelman, and Mortgage Bankers Association, they all had predicted 2021 home prices is going to go up in double digits, which we have seen just now from the previous charts. They are pretty accurate about that. Now, what about 2022? This is their forecast. Fannie Mae at 7.4%, Freddie Mac is 7%, Mortgage Bankers Association at 5.2, and HPS as 5.1, Zelman at 3, and NAR at 2.8%. Although they are much more conservative compared to their last year's forecast of 2021 number, but it's still going up. So they are all expecting the pricing is going to go up still for 2022. I know a lot of people have been talking about, again, market crash, and because of a lot of different scenarios. They worry about the foreclosures. They worry that because the price has gone up so much, there's no way it's sustainable. But most of the organizations are still predicting that the pricing are going to go up. One of the main reasons, of course, is because of the inflation as well. The supply is still low, and also about the mortgage rates. Now, of course, then we need to talk about mortgage rates and where are they heading. Now, currently, just got this rates today from Victor Chow at Wells Fargo, and he has shared that the high balance conforming 30 years fixed today is at 3.25. And the jumbo loan 30 years fixed at 3% with a discount point of 0.375. As you see that there's an APR as well. I just kind of wanted, in case there are some audience here don't know what's the difference between interest rate and an APR, why there is a difference. We always want to remind our clients that when you look at the mortgage rate, you also need to know about the APR, because the APR actually included some of the closing costs for the this interest rate. So APR actually included the fees that you are paying for that particular interest rate. So if there is a big discrepancy, instead, for example, if someone else quoted you at 2.95, but the APR is at 3.2, you're actually paying a lot more fees to get that 2.95% interest rate. So be sure when you ask for the mortgage rate with any of your lenders, and be sure to ask about the APR as well. All right, so again, now we want to know where are the rates going to go to, and they adjusted their prediction. However, the good news is that most of them now, they're quite consistent with each other. Last month, we see Fannie Mae was a lot lower with their projections, but then this month they have adjusted. Now everybody is kind of on the same page now. As you see for 2021 4Q, Freddie Mac is projecting 3.2%, and Fannie Mae adjusted their projections to 3.1, Mortgage Bankers Association 3.1, and NAR is 3.1. But also for 1Q, 2Q, and 3Q in 2022, you see the trend that they are all like kind of trending up to about mid threes, around that range. So just understanding that, I know some of you might say that you want to wait, you can have to also adjust with, one is that the property price is going to go up, and also the mortgage rate might be adjusting up as well. And there is somewhat a correlation between the inflation rates and mortgage rates. Now, because the inflation rate, as you see, and you probably heard from the news, is that the inflation rate has gone up to 6.2% right now. And as you see that this is the highest, and I think in the last 30 years. So it is definitely something that we need to watch for. And we definitely see our gas pumps. I don't know about you guys, but the other day I was trying to pump gas, and I think it was like $5, over $5 for me to pump the premium gas, and it was pretty darn expensive. I've never seen that before. So we definitely see a lot of cost of consumer the products have gone up in quite a bit. And then also, I don't know if you guys have already prepared for your Christmas gifts shopping, but this is a time that you probably want to start ordering your gifts. Now, how does this inflation going to affect the mortgage rates? Because of the inflation pickup, Fed is more likely to raise the Fed rates next year, and because they need to slow it down a little bit, and because the Fed will likely raise their interest rate by middle of next year, when the Fed increases its interest rate, typically banks will do too. So when that happens, then you will start seeing mortgage rates to go up for the borrowers. So right now, remember the projections for these agencies, they are all pretty moderate right now. But if as soon as the Fed adjusts their rates, it's very well that they might also adjust their mortgage rates projections as well. So Mortgage Bankers Association, they are the only one right now have projected all the way to 2023 3Q. And 2023 Q, they have projected up to 4.3. So it looks like they are still thinking that in 2023, it's going to be in the 4 range. Historically, it's still pretty low because I remember when I first started in real estate, it was at 7% at the time. So 4% is still really low. However, it is going to be a lot more expensive. It's almost over 1% more expensive compared to this year. With the inflation going up, and there is a domino effect. Now, because of that, tax brackets is going to be higher in 2022. We can have a complete separate topic about this, how this inflation is going to affect our taxes. But one thing is that looks like it's going to have a better, of course, effect for a lot of people because your tax bracket's going up and also some of the deduction will get to go up as well. However, if you are a home seller, you are kind of squeezed because married couples can exclude up to $500,000 in capital gains taxes, but that figure hasn't changed since 1997 law, while the median home prices has more than doubled since then. So if your property has increased value for over $500,000 and anything over that, you are subject to capital gain tax. In that case, some of the home sellers, one is that if they can refinance into a lower rate, then why would they want to buy another property that's a lot more expensive? And on top of that, they will have to pay for the capital gain tax. So this is another reason why we are seeing such tight housing supply, because a lot of sellers are just not willing to sell their properties. All right, are you guys ready to talk about Zillow? Now, this has been a really, really popular conversation in the last few weeks as soon when the Zillow CEO came out and announced that they're going to halt iBuyer program that they had. They were really proud of it. They were talking about how easy they're going to make this home buying process. They are going to use their valuation model to purchase home. But then they realized that they are going to lose a ton of money. And on top of that, this is really unfortunate because of their decision making. They are going to be laying off 25% of their staff. So a lot of people are going to be out of work. Now, one of the main reasons why this whole program flopped away is because that they blamed a faulty algorithmic model for ditching its iBuying business of buying and selling homes quickly. And the surprising exit announced with pedestrian quarterly profits thresh shares another rough trading session Tuesday, a day after an analyst said 2/3 of the home it bought are underwater. So to understand why this didn't work out is mostly because of valuation. Doesn't matter if you're Zillow or if you're a home buyer or if you're an investor, a flipper, valuating a property is probably the most important thing. Now, when you are buying for your own primary residence that you plan on living for a long time, for 10 years, that there's a reason why you want to buy that home, because it's for your home. I always say that a home to a person for you to live in is not just a structure that you're buying. You're really buying to build memories. This is for security and for your family to grow in and give you a sense of security, give your family a place where you can always remember. However, there are a lot of investors or companies who buy and they want to flip. And if they don't do their valuation correctly, they can make huge mistakes, especially for flippers. Just to give you an example, here's an example. I used the same home, same address, and I put it into different website to look at their valuation. Zestimate, which is from Zillow, they estimate at over $3.1 million. I go to Redfin, it says 2.856. That's almost $200,000 difference. And that $200,000 difference can make or break an investor if they plan on flipping this property, which is what Zillow was doing. And I'll try another valuation model. And now for them is 2.779. And 3 more valuation model. We went from 2.4 to 2.839. So which one is correct? It's really hard. I know this algorithm is very complex and they look at a lot of different things, but no matter what, they can never replace what humans can see, can feel, can hear at the property. The location of the property, can you hear traffic noise? The algorithm cannot really figure that out. Sometimes we even look at maybe it's a T intersection. Some people don't like that. Or maybe the floor plan inside the house. These algorithms cannot really know about the floor plan inside the house. So there are a lot of things that need to be factored in. And that's why it's so important. I cannot emphasize this over and over again with my clients is that we have to do our own valuation. I don't care what Zillow says. I don't care what Redfin says or any other of these computers as the valuation is. Our team always runs our own valuation model and to compare not only the sales price of the other property, but also the condition, the location, everything in order to make a decision on the value. So just wanted to show you guys why Zillow iBuyer program flop. When it first came out, I know a lot of us were talking about how can this even be smart, to use that kind of program to buy properties. Sadly, is true. And sadly that they have failed this time and they lost so much money and this affected so many people from the workforce that they have to lay off 25% of their staff. So just a reminder and a warning for everybody to make sure that work with your realtors to come up with the best valuation of your home. I hope you guys enjoyed this session and please be sure to come back. Please do subscribe and like this video. Thank you so much and I'll see you guys next time. Bye.